Hello everyone, welcome back to FX Pilots. In today's video, I want to cover many things about structure. Remember the last video about structure? Make sure you've watched it and also like and subscribe. So let's start. Let's start with this. This is your USD, and I want to analyze this using the structure, understand the structure from a monthly time frame. Let's go that way. So this will be a monthly, a multi-time frame full top-down analysis from the baby step, showing you how structure works, how banks use structure. Okay, so watch this now. There's a difference. Okay, let me bring the idea to you about this. One, two, three, four, five. A, B, C. Have a white girls. What is this? If you're from a retail background, you definitely know what this is. But if you don't, well, this is an Elliott wave. So this leg here, this leg is the wave one. So let me just make this black. And this leg is the wave two, and this wave three, wave four, wave five, and this wave is the A, this is B, and this wave is C. So let's just get rid of all this donks. Yeah, perfect. So in these waves, because the forex market is very fractal, inside each legs you also have the same thing. So this time I'm gonna make it purple. Why do I choose purple? It's silly, right? So we still have one. See, same thing over and over and over and over again, just in depth, going deep. So this is what is actually happening every single time in the forex market. Every time. So yeah, so let me just change this to purple since it's an inner structure. This is purple. Perfect. So in this leg, we have the structure been playing out. The structure plays out perfectly inside this leg, and inside this leg we have another structure. So this is the idea of micro and macro structure. So macro structure is the big boy structure, the bigger time frame structure, and micro structure is the smaller time frame structure. Remember, the bigger time frames control the smaller time frames. So don't get confused and say, the smaller time frame is bullish, so I want to be bullish, or the smaller time frame is bearish and I want to be bearish. The larger time frames control everything. So let's use this part to actually see what is happening with structure from a monthly time frame. So this was the first high, and this was the first low. So I don't actually care about this part that much. So from here, the market just rallied up like this, and what next? Like this, and we're expecting something bigger. So this is what I'm seeing. This is clearly the let me just make this black. This is the macro structure. So now let's see what's happening with the microstructure. Inside we have this move up, this down, this move up, up, down, up, and bunch of this, 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 and we have this this and this. So even inside all the structure, we have more microscopic structure plays out inside every structure, because this is a monthly time frame. We still have the weekly, daily, 4 hour, an hour, 30 minute, even the much smaller time frame. So what we are really concerned about is the most recent price. So this this whole area. So let me just box it this area. That this is where we're actually interested in, the spot, and it will be very visible, very visible on the daily time frame. So let me just scroll my mouse, and but we're still using the historical price. This move up, this one here, this move, this move, and we want to see lower prices. That's just it. Hmm. So I know this might be confusing because I'm starting from a very high time frame. Well, banks don't go to the 15-minute time frame or 30-minute time frame to look for opportunity. They trade from a higher time frame. So you need to know what they're doing to have a directional bias and to know what is happening with structure. So let's just do this real quick and understand what is happening to structure. So we had this move. I'm starting from here. Okay, let's say here we have this move up and this move down, not coming below there, which means we want to see continuation. But now this market face to go above here and came down here going below. So that is a breaker structure. That's what I call breaker structure. And from this zone here, we just want to see maybe a push here and the move downward. Because this was a perfect breaker structure. This is what you need to understand from this daily time frame. This is a higher time frame, and this is a breaker structure. So there's a shift in structure on the bigger time frame, the daily time frame. So what does that mean? It means everything. Yeah. It means the market wants to continue trending towards the downside. So now let's see what is happening, because this right here is the high, this is the high, and this is the low. This is the oopsie, and this is the low. So this is what I like to call the spider's zone. So this is a spider zone. So this is where we want to trade. This is in this zone, we want to trade in the zone. So from this high to the low, we're going to observe structure. So let me go to a much deeper time frame so you could understand what is happening. I guess the daily time frame will be fine. So we had this move down, this move up, this move down, this move up, not violating any structure. It was just perfectly dropping. And this move that broke structure. Where was the breaker structure? Alright, let me take you there. This is the breaker structure. It's perfectly broke structure. And now we want to see. Remember, our higher time frame bias is to see this low being violated, but for the for just a short period of time, we want to see buys to clear out this imbalance. So my next video will actually be on imbalance and liquidity, so don't worry about that. I got that covered. So we want to see buys for just a short period of time, and let me use the part two so you understand what I'm saying. So let's say from this moment, I want to see, buys, and then the flash crash, then everything will just end. So that's what I'm expecting. So this is a daily time frame. So now, perfectly, we're now cropping the zone. So it's now, this is our new spider zone. It's much more smaller now. So that's how I do this. That's how I basically trade. So from this zone here, from here, we want to, this will be our target, this high there. So let me go to the 4 hour time frame and observe price from this high, from this low to this high. What structure doing? Move up. You could just say up, down, up, down. No structure was violated, and finally, this was the push. This week, Islam, everything. See now, everything is changing. Now it wants to continue downward. Why? Because we've seen another break of structure, and this is quite a high time frame because at the 4 hours it really counts. This is the break of structure. Perfect. That's the break of structure. And where's the high? This is the high. And where is the low? This is the low. This is where what I call protected high. Okay, let me just put this so you understand. PT high. That's a protected high. And this is my liquidity. Sorry. Let's just get rid of that. And this here is my liquidity low. What is liquidity? Liquidity is obvious. It's money in an obvious way. It's just money. So the market moves because of liquidity. The market moves. This is how the market moves. It creates and takes liquidity because uh, money rests above every swing high in the market and every swing low. And traders trading support and resistance is also an idea of where liquidity rise, like price respecting same place for multiple times. You definitely want to see that place get liquidated. So from this zone now, from the protected high to the liquidity pool, you still want to observe price. So this structure, sorry, and so everything is moving quite fine. This high wasn't violated, and we want to see the push down. So perfect, perfect. And I'll just go deeper to like the hourly time frame and observe shift in structure. So currently now, I guess this there's nothing really to actually nothing really interests me because there's no break of structure, no break of structure yet. Yeah, no break of structure. Sorry about this. No break of structure. Well, the market is not presenting anything at this time and moment. So let me just use the drawing board and show you something. So this is let's assume this is current price. This is the market, and we had the steady downward trends, and all of a sudden this happened. So this is a break of structure because it violated this low, this higher low. And where do I look for my entry? I don't want to talk about entry now. Yeah, this it's in the next video probably. So let me just restart the illustration. Had this perfect run towards the downside and this move there, breaking the structure. So if this is now a shift in structure because everything is changing. So that's how you observe and get in at an early stage. So that's what I'm watching right now. That's what I'm looking at. Because what many people fail to understand is just structure. Structure is literally everything in the market. You see this little nice break structure here. This break structure changes everything in the move. Look at how this was steadily trending and just this one pull changes everything. So let me show you that in the current price. Oopsie. Yeah. So yep, this move up, down, up, down, higher high, higher low, higher high, higher low, higher high. Then now we're seeing okay, there's a little bit, but you know, let's just proceed because I didn't see it at first, but so I don't count it. And let's move down now. So everything is changing from higher highs and higher low. Now it's now lower high, lower low, lower high, lower low, lower high, lower low, lower high, and we want to see another lower low. So where was the break of structure now? Where was the break of structure? Sorry. Let's see. So yeah, this was the break of structure. Perfect. This is where everything changed. This is where structure was violated, and that was why it stopped, and that was why it continued trending this way. And we still want to see lower prices because from a higher time frame, remember, from the 4 hour, I guess, I'm not too sure, but yes, in the 4 hours we had this perfect liquidity pool, and we want to see lower prices from the zone. Remember, this is our spider zone. This is the zone. This is where we want to trade, and we're already getting more than 50% of it if we were to enter right now. So I guess this is where I'll be rounding up. I don't want this video to be too long, and so I want it to be watchable. I want it to be watchable. So make sure you like, share with friends. If you like my content, tell me in the comment below, and make sure you like. If you really like my content, smash the like button, and if you don't, leave a dislike, but tell me why. So yeah, have a blessed day.